Hello, what is going on, and welcome to my channel. And today we're going to be doing a monthly portfolio review. So if you're watching this video, you're probably in the market, and you'll know it's been quite a rough month for some people. The first 2 weeks were alright, third week a bit bad, fourth week for me was quite good personally, and that's mainly been down to Trump's tariffs, but it's been a bit crazy. Luckily, I haven't been affected massively by it. I've got more UK stocks than anything. So, whilst a lot of the American ones are down, I'm doing alright. So, if we look at how I've done over the month, I'm up 4.5%. I have invested £30 this month, which is less than usual, but I had quite a lot of things I wanted to pay for this month. So I put £30 in my pie, which will cover all of the following stocks, and then I have one stock outside of my pie which I didn't invest in this month because when I got paid it was sat too high, but we'll get into that. So if we look at my JP Morgan Global Growth and Income Fund, this was down 3.5%. Not really any news why, just poor performance really. I think a lot of the stocks, the growth stocks, that are down overall in the market, which obviously would have affected that one. I earned just under 8 shares of that, which are now valued at just under £45. My plan for this one is once I break even, I think I'm going to sell it and change it for an all-world fund. I just need to look into that, so if you have any suggestions, let me know down below. Next up is Rolls-Royce. I think this is my best performer this month. So they're up 27%, and they had massive earnings report, which I've covered in 2 different videos on this channel now. But my investment in Rolls-Royce has gone up just under 26% in total now. I own under 5 shares, which is quite sickening for me because I owned around 80 shares back during COVID times when the average was between 80 and 90 pence. But yeah, I'm glad to be back in Rolls-Royce. I see it long term, and why it's gone up so much is because posted the earnings, which were quite good. Within them earnings, they're returning a dividend of 6 pence per share. They're buying back £1 billion worth of shares in the 2025 calendar. They've upgraded their mid-term projections. So yeah, Rolls-Royce are smashing it, and I'm not complaining. Next up is another good performer, which was Lloyds Bank. So over the last month, they performed well at 16% increase. My overall investment now is up by 29% roughly, and I own 32 shares in Lloyds. So it's been a good month for Lloyds. It's been a good month for a few banks actually. The reason why they're up so much is probably because their underlying net interest income was £4.7 billion, up from £4.6 billion a year previously, and that was also above expectations of £4.36 billion. And they have plans to implement a share buyback program of up to £1.7 billion. Whether they do all of that remains to be seen, but other than that, I don't really think there's been any more major news, if I'm honest. I didn't really look into the earnings too much. I wasn't concerned. I just like Lloyds as a bank and as a stock, so that's why I'm in Lloyds. I probably just need to do some more analysis really. That's not a good reason to stay in, is it? But yeah, moving on to the next one we have is Barclays. It's another bank. This one was just up 5% this month, so I'm up 13% on that one. Do I really need 2 banks? I think I originally went for Lloyds because it was more of a domestic bank, and then I went for Barclays because they have more on the international scene. Maybe so I just get rid of one and keep one, so I only have one financial sector in my portfolio. But positive month for Barclays overall, can't complain about that one. Up next we have Take-Two Interactive Software. So these own Rockstar and 2K Games. So whilst I think the release of Rockstar is already factored into the price, I think this is a good hold for at least 2 years to see how the financials perform under that new game. But anyway, that's up 11.5% this month, up 9% on my initial investment. I mean, I own absolute pennies in this, so is it really worth me investing? Probably not, but I'm holding on to the idea of owning a little bit of Rockstar. Probably is not good investment behavior, but it's up, so I can't complain about that one. After take two, we've got TKO Group Holdings. I don't know why I struggle to say that one. So it's down 4% in the last month for me, and I don't really know why. Let me have a quick look. So it looks like they performed well in the financial report, but their outlook for this year is lower than what analysts are looking for. So whether it's a bit of sandbagging or they just don't think they're going to have a good year, I don't know. Personally, I still like it. So they own WWE and UFC. So I think with WWE going on Netflix, that's a positive overall for the company. And they've just acquired 3 companies from a brand called Endeavour, which I've never heard of before. But be interesting to see how that affects it. But they did also announce that they're gonna they've announced that they've approved the first quarterly dividend of 38 cents per share. Don't think I'll say that because I own 0.15 of a share, but yeah, whether that's a positive or negative, I don't know. Moving on, we have Marks and Spencer. So I like Marks and Spencer as a brand. I think what they're doing and what the CEO is doing is quite good. But since the new year, it tanked. I think I was down 15% at one point. I'm not concerned though. I do like them. I like where they're going, what the vision is for the future. But they have recovered since that original tanking. So I'm now down 2.6%, but for the month they performed 7.5% in the green. So I'm happy with that. They have been downgraded by Jefferies to a hold, and they've reduced the price target, but I'm not concerned. I think long term Marks and Spencer is a good player for me personally. Moving on, we've got Microsoft. So this one is the last stock in my pie. So in the last month they're down 10%, and for my investment personally, I'm down 7%. Now I own 0.05 of a share, which isn't a lot. I know it's not, but whilst I'm only investing a small amount, I'm just looking at the percentage return rather than the actual monetary return. I like Microsoft as a company. They've continued going down since February ended, but I think it's a good buy going forward personally. So I'm going to stick with investing into Microsoft. Now when I look at my pie, obviously I'm considering selling my JP Morgan fund, so I need to look at where I need to put that money, and then I might be selling one of my banks. But yeah, that's how the pie is performed. I'd like to start putting more into Microsoft and more into Rolls Royce, but I just need to wait until I've got a bit more free money. And if we go on to my final stock for this month, it is Grab. So I originally invested in this back in January, and then it's had its earnings since then, which have performed well / as expected, and the share price has been all over, as you can see by the chart, hitting over $5.30 a share, and it's back down. So for the month I've ended up being up 1.46%. My total investment's nearly up 7%. I'm still going to keep buying this one. I'll probably just put more in next month, but this is a long-term hold for me, or mid-term hold. Might get it for a few years and sell, but I do like the company, but I didn't want to buy higher than $5 per share. When I got paid for the month, it went above that. It was already above that, and I didn't want to put any more cash into my stocks. But yeah, that has been my portfolio update. So quick summary is I'm up 4.5%, or £9.33. It's small numbers, but I'm focusing on the percentage because that's the main thing to me at the minute. Let me know how you got on in the month of February. I know it was quite a rough month for some people. Leave a comment below how you think I'm doing, what you would change, what any suggestions you might have. Let me know what ETF I should possibly go for, because I might be changing that. And yeah, subscribe for more videos like this, and I'll see you in the next one.